Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Tellurian, and I have updated my cash flow model for Driftwood LNG Phase 1 to use the current JKM, Henry Hub, and TTF prices, at least current meaning the current price of the futures. And I also updated my model to work on a month-to-month basis rather than the crude annual model that I was using before. So before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so this video should be for your entertainment purposes only, because I could be wrong about everything that I say. You need to do your own research before making any investment decisions. So, I have gone over, I sort of put together this model or a similar model in the past, but I didn't update recently based on just the current pricing. And this is, where this model of the future cash flows as I see them for Driftwood LNG, particularly for phase one, is really where I derive my conviction for Tellurian. I know I've gotten a number of comments, people asking, what do I think is going on with Tellurian, the share price, and what impacts some other events might have. And I've been pondering some of that and see if there's something interesting that I have to say on those topics. But the core of my conviction as to why I have a long position in Tellurian is what I'm going to go through today. And this is just, the fundamentals on a global basis, right? And that is the major spreads that you see between this, and just that it still looks like a very profitable project. And, I think just that is going to, that plus experience management really, in my estimation, gives a very, very good risk reward ratio at the current moment. So let me go through the model here. This is just a bunch of numbers right here, but really I got the TTF, JKM, and then the Henry Hub. Oh, I'm missing column. Henry Hub, TTF, and JKM futures prices from this website here, CME Group, and I extracted all of this data. And I threw away all the data before 2026 because it's interesting, but it's not relevant for Driftwood LNG's cash flows. Henry Hub is potentially relevant for Tellurian's current gas production, but if we're looking at Driftwood, it just doesn't really matter until 2026 at the earliest. So at least as far as I know. And so I got those numbers, and that is where I'm getting this month-to-month quotes for each of these commodities. From there, you can just subtract them to get the spread, and then I subtracted off $2. This comes for expenses, right? This is for both transportation and or liquefaction. And this is, I just use a flat $2 because this is what I've seen used as an estimate in other places. And this, I'll call it out right now, is a potential risk in this model where I actually don't know what those rates might potentially be in 2026 and beyond. But I kind of use a flat $2 here because that's what I've seen used in other places, and I think that makes sense, right? That's actually mostly on the higher transportation cost for JKM, and a higher a lower transportation cost, but a higher cost a fee to actually re-liquefy the regasify the LNG, I guess it would be, that is shipped to Europe for the TTF. So that is the basis of this model here. And getting into the numbers here, you actually do look at the spreads, and the spreads are huge for TTF. They're in the 30s. Scrolling down this column here, this is column F that I'm looking at. This is after I subtracted off the $2 that I think represent the additional charges that are going to come off of what Tellurian is going to be able to get from that. And you see the spreads here, even in 2026 and 2027, are in the 30s. And for the data on CME Group only goes for JKM up to the end of 2027. But for TTF, they actually have the data for, I think, all the way through 2030 or 2031. You can see the spreads versus Henry Hub are still in the upper 20s. It doesn't drop down. There's not a single month, I think, where it drops below, was this 26? 26, finally, if we're going all the way out to 2031. So that is going to be a massive, massive source of just it's a massive spread that goes on for years and years. So that is at least a big part of the basis for the conviction and going forward, and to what I really think is going to carry this project to, I think, is going to allow it to get funded and then to generate significant profits in the future. So then what I did with this model, going back to the model here, is I took those spreads after I've already subtracted off the $2 to represent what I think Tellurian can get for each of these different indices. And then I average those together, right? And this is the best that we can do right now. We don't actually know what the balance is between them in their contracts. It is proprietary information at the current moment. We'll see that in the future, but as of right now, I'm just doing a 50-50 split, and I think it's hopefully that's close. We don't really know, but that's the assumption that I'm making here. I do think they have a little bit of wiggle room in the additional 2 million tons per year that are not explicitly under contract, where I assume they're going to be trying to sell that at the whichever is the most profitable, either TTF or JKM, probably. That is my assumption. Maybe they'll sign some additional contracts, maybe some shorter term contracts for that capacity. I don't know, but right now I'm working under the assumption that, I think a 50-50 split might even be conservative if they do actually have the leeway to sell that 2 of the 11 million tons per year from phase 1 at whichever seems to be most profitable for them. So going on with the model, once I average those spreads, and then I also, for Tellurian, gave them a slight production, I'm calling it a production benefit, and this is just the recognition that if they are producing their own gas, all of a sudden the cost of Henry Hub is not relevant. And I put this in here, and I've talked about this in the past, where looking at the trajectory of their increasing capacity of Tellurian Productions LLC, I think is what it's called, but their actual gas production side of the business that they have, and the trajectory seems to be that they will be able to produce about 1/3 of what Driftwood needs in terms of feed gas by the time phase 1 starts producing LNG. And that is what I'm using here. Again, as I've mentioned in the past, if they do strike some deal with a gas producer, or if they actually, specifically a deal to acquire somebody, acquire more acreage, right? That this could be all thrown out the window, but that's also going to change some other factors in this model, namely probably either their debt or their equity, right? And so that's going to come through somewhere else, and we'll just have to judge that as it comes in. So for now, I am assuming that does not happen, and that they just ramp their current production as it exists up to 1/3 of the feed gas for phase 1 of Driftwood. So, and that gives them a benefit where I assumed it was actually going to cost them, it would be the equivalent of $2.5 rather than whatever the Henry Hub is. And so this is me saying, well, I think you're going to buy 2/3 of your gas from Henry Hub, but 1/3 you're going to be able to produce yourself at $2.50, regardless of what Henry Hub costs. So that is what this gas production benefit is. And then I add that into their margin, right? Because that's just lower costs. And so that slightly increases what I think the margin is for Tellurian. And then I multiplied by their monthly LNG output, which I believe would be, I think I have the number in here, 0.0458, and that would represent, what is that? Their million MMBTUs. Sorry, I don't recall exactly what it is. I got the number from some other documents that I already had, other models. But I believe that this is correct. Right, feel free to check me on that. I think that comes out to 550 BCF per year is in the end what it is. And that's the base model that I think the base number I got from Tellurian's model in their investor presentation. So going through with this, then I also subtracted off what I estimate as their interest and their operating expense costs. And this is assuming that they get 70% funded by debt. And so I think this was, I've gone through in the past. Hi, Wakaza. Thanks for hopping on the stream. Glad to see you here. Sorry, I've been gone for a couple of weeks. We had some personal stuff going on. Just busy. So going through, I'm great. I love to see you on here. So thanks for joining. But going on with the model here, once I subtract that off, then that gets me to free cash flow. Well, sorry, that gives me the free cash flow. And then I am assuming 1.3 billion shares are going to be outstanding. And so the way that I got to this number, I know people have a lot of folks, a couple folks that I talk to don't think the number is going to end up being as high. I am using this as what I think is a fairly conservative number, or at least realistic, let's say, right? If they're able to do some magic, because management is experienced and knows what they're doing, then that would be fantastic. I would love for this number of shares to be lower. However, this is what I'm assuming it is. And I did this basically. Hi, Transient Stacker. Hello. Glad to see you on here. So for their shares outstanding, right, we do know that they're in their most recent filing, they gave us an updated number, and this was, as of beginning of June. It was 568 million shares are currently outstanding, and I think they said they have about 31 million shares that are reserved, and I think that's because of the outstanding options. They have a little bit outstanding for Bechtel with the preferred shares, and so I think as of right now, there's about 690. And then there's another, roughly 90,000. I think it's like 87 million shares that are issuable upon conversion of the most recent convertible, notes that they just issued. Right, this issuance here. And I was also going to say this is my source for their current outstanding share count, right? 568 million, right? That's what they currently have. I think that's even more recent than their most recent 10Q. So that's where I'm getting this. And then so all of that together accounts for about 690 million shares that are basically already either exist or could be, will exist with things that have already been issued and the conversion there. Now, I also looked at it. They have about $800 million in cash right now, right? And that's coming from the recent video that Sharif Suki put out. And if you assume that they're able to put basically all of that towards Driftwood, and that comprises part of the equity portion, and if they make, as they've said, about $300 million in EBITDA for the next 4 years, that's another 1.2 billion. And so maybe that's a bit optimistic to think that much cash will actually go towards Driftwood, but I have to imagine that it will in some shape or form. The potential argument against that might be whatever costs they need to run the company between here and there. But I think a lot of that is going to be, there's enough wiggle room, I think, in what their EBITDA is going to be with their gas production, and that's actually going to ramp up. But I think that's a reasonable estimate. So all that together, $800 million cash right now, 1.2 billion in EBITDA over the next 4 years. That's $2 billion. And I am counting that as $4 billion two of the $4 billion that they will need in the equity portion for Driftwood LNG Phase 1. So then they need to come up with the other $2 billion for the total $4 billion. And if I figure that they can probably dilute at the same rate that they did this offering at, and again, they can do better in the future, that's fantastic. But if they get the same effective share price here, their effective share price from this convertible notes is basically, like, I calculate it as $4.57 per share. And I know that's significantly lower than what they call it, the strike price here, the conversion price of $5.72. But they're also paying interest on this, and they're also paying fees when they issue this, right? A 2% fee for the placement agent. And so when you subtract off those and you divide it, and it really comes out to more like $4.57 per share as far as I'm concerned, right? Once you take off those debt payments and the fees. So that's what I'm seeing here. And if once I divide that out, that is where I'm getting from increasing from the current roughly 690 million shares up to about 1.3 billion shares. You can do the math yourself. If you just divide it, it comes out to about I think it's like 1.2, maybe 1.125 billion. And I sort of added a little bit more because, things still happen. They are still going to issue more shares to management. And so 1.3 billion, I think, is a credible number. So divide by 1.3 billion, and that gets me to my free cash flow per share in each month in 2026, right? Based off of that, that's my model here. And so you're looking at this, and again, this is a per month number in free cash flow per share. if everything lines up the way that I laid out. And I crossed off these numbers because it's ambiguous at what point in 2026 they think they're going to start delivering LNG. But if we assume they start in Q4, which I think Sharif Suki has laid out or mentioned a couple times, they're on track to deliver LNG in the first quarter of 2026. And so if that's the case, this would be even better. But if they don't get it until the end of 2026, I think that has been thrown around before as well. We're looking at starting free cash flows that are, on the order of like 65 cents per share per month, right? And so this is going to be massive for the company based on the current spreads. And this is, again, as I alluded to earlier on in the video, this is basically thanks to the massive, TTF pricing that we have. And we see that this is, in the 40s and 30s and doesn't go below the 30s all the way out to 2031, right? And their spreads stay pretty high. So that is really great for the company to see. And then I added another column here where if we say they start shipping LNG in, at the beginning of Q4 in 2026 and even continue on all the way through 2027, they're going to, stack up a lot of money, right? They could stack up, $8 of free cash flow per share just in that time period, right? So by the end of 2027, we might be sitting on a lot more cash flow, cash per share, than what the current share price even is. So that's roughly the model that I have here today and what I see as the updated cash flows. And I should call out, right, that JKM is significantly, just does not contribute very much, right? If I look at the spreads for JKM later in 2026 and 2020, especially in 2027, they get much thinner, right? That I think we're looking at more like $2 for a spread there. Maybe if we add back in the 50 cents they get from gas production benefits, maybe it's $2.50 or so. And yeah, so that's where I'm at. All right, I see I have a couple questions on the chat, some comments here. Let's see. Beef says, do you see the stock price increasing by the end of the year? I don't know what's going to happen by the end of this year. I think I'll tell you what I'm looking for is, and I think everybody's looking for this, is just certainty in the financing, right? I think that's the big outstanding piece right now is what is the financing going to look like and is it going to actually happen, right? I think that the biggest concern, if I was going to call out the bear thesis and the risk right now for the stock and for the company, it would be things are tightening. We're potentially heading into a recession. If things get really bad, just there may not be financing available, right? Just no matter how good it looks on paper, banks just might not want to lend. We'll see how that goes. I mean, I think the other thing would be if magically Europe and Russia, things got better very, very rapidly and the gas started flowing back through those pipelines, that would also be a significant, blow to Tellurian in terms of the chances of getting this project done. Because again, a lot of this arbitrage in terms of the spread here is actually coming from TTF, which is the gas in Europe. Mathematical, sorry if I mispronounced that, says, what was your your outstanding shares projection to get phase 1 financed? Yeah. So I was using 1.3 billion shares, right? And I'll go through this just again. I talked about it a moment ago, so I'll try to be brief this time. Right, the most recent offering here of the convertible notes, we saw they reported that there are currently 568 million shares outstanding. I think there's another 31, and I think that's from outstanding options that they have. And then there's a handful from Bechtel. I think that's the 6 million Series C, which I think convert on a 1-to-1 basis, right? And so you add that all up, that plus the roughly 87 million that would be issued upon the conversion of these notes themselves, that gets you to roughly 690 million shares. And then I was figuring they're going to have to raise another $2 billion roughly on top of what they've already raised so far in order to fund their equity portion of Driftwood LNG Phase 1. And that is even assuming that they're going to get roughly 70% debt financing, which I think is probably the max that we could expect. So 70% debt leaves 30% equity, and that leaves the $4 billion. Figure they already have 800 million on hand right now that they can contribute towards that. Figure they make over the next 4 years 1.2 billion in EBITDA from just gas production that they, the operations that they currently have and that they're ramping up. Add those together, 800 million, 1.2 billion. That gets you to 2 billion. So you have half of the 4 billion that you need, and then you issue the other 2 billion at what I believe is the effective stock price that they issued these at, and I am computing that as $4.57. So that is how I got. You divide that out, and that that gets you to roughly 1.2 billion shares, and then I rounded up the 1.3 because I think they're going to issue a little bit more. Rounded up. That's really just added a bit more to call it 1.3 billion because I think they're going to issue some more to management and such as time goes on. So that is how I got to the 1.3 billion shares. Hopefully that answers your question. If not, let me know. All right, so that was it. I'm gonna check my mic. I'm glad it's been working this whole time. I don't know if there's any other questions or comments. If not, I am gonna hop off so I don't just keep rambling. I know I've done that a couple times, and I apologize for y'all. What do you think about the EQT rumor? I don't know. It's interesting, and I know I had a prior video talking about gas producers, and how it makes sense. It makes tons of sense for them to take a stake or to make some sort of a deal. And I don't know exactly, again, what that would look like. But yeah, I think it's anything that's going to push the project forward, I think is going to be good. Right. And I think Tellurian knows that they're in a good position right now. I mean, no matter what the stock price is doing, right, they've got so much cash on hand. They've got the project moving forward. They're managing it like a project. He continually, Sharif Suki continually reiterates, the project is on schedule to deliver LNG in the first quarter of 2026. And, that's what's most important, right? No matter how there's that, and then that as a common stock investor, right? It also matters how do they actually finance the project, right? What remains for the common stock investor. But, in terms of what the company can do and not the investors, right? That's the most important part. But yeah, I think, if EQT is gonna help fund it and toss us some billions, that would be, in my opinion, good. I can't see how they're gonna strike a deal that's gonna be bad. All right, Mathematicoi says, any thoughts on government funding if the administration deems LNG investment is a matter of national/global security? How could that look like? I am not completely sure how that would look like, right? I did a prior video talking about what I could find about the Export-Import Bank, but still they were a little vague on the details, right? I think they sort of seemed like they take things on a bit of a case-by-case basis. Yeah, I don't know. Like it's an interesting thought, but I'd be real surprised personally if they did that with the current administration, just because like that seems like something more of what Europe would do, right? Because I think Europe is in more of a hard spot in terms of needing the energy for I don't know. Like I just think for the current administration to say this is important, we're gonna fund it as sort of a top down thing, from the highest levels, right? From the president or at those very highest levels, like even the secretary of energy, something like that. I just think it's against the renewables and green energy push. I know that there's the European, like, let's declare gas as green. I don't know that would fly, with the general public in the US. I think that probably could fly a little bit more in Europe where they're, in an energy crunch. Whereas I know prices are high here, but we're not really in, the massive crunch that they are in. That's my thought on it. So, I mean, sorry, but your question was specifically if they deemed it. I mean, I don't know what that would look like, right? I think when the government gets involved, I think all bets are off, right? When they want to start say this is a matter of national or global security, I don't know. That's uncharted territory, right? Because I think the government's going to do whatever they want at that point, and I personally think that is a risk. I think they could. You listen to how they talk, and what I hear in the media from the current administration in terms of curbing profits and these energy companies are making too much money. Like, I can't imagine that's going to be good for Tellurian if they do that. Even if it would get Driftwood progressing, that makes me nervous about what strings come attached with that. So, all right, thank you all for hopping on the chat. I think I am gonna hop off now. I gotta go go do a couple of things, but I appreciate having y'all here. I will try to get back into doing more streams. I know that I took a bit off and things got busy, but thank you so much for watching, everybody, and have a good one.